Hi guys, good evening. This is Vineet. I'm the partner and CEO of Cypher Capital, one of the $100 million funds based out of Dubai. And the topic that I'm talking today is more on the mining hedge. Where you actually, I believe that as a fund manager, it's not just about deploying capital and getting multiples. It's also about management of risk. I think Three Arrows Capital has clearly shown us that it's not about all or nothing. It's not, you're not just gambling on a red or a black. So here, this is a topic that I'll be talking about. How do you manage your investments and risk as a fund? Now, when you look at bull market, if you remember 1.5 years back when suddenly BTC was going all the way to $60,000-$70,000, there were multiples of projects that were coming out. And deployment was really, really happening like crazy. $43 billion was invested in late 2020. This was like every day you were having hundreds of projects that were launching. Infrastructure projects were there. If you guys remember Play to Earn, when Axie Infinity came up, there were thousands of people who were building games, and money was just flying left, right, and center. And I believe a lot of people, a lot of funds invested crazily. So that's what the bull market is all about: deployment of a lot of capital. But in a bear market, now this is the criteria. You have a lot of fund. If you remember, A16Z just raised a $6 billion fund. There are multiple other funds that have been raising like crazy. And there's a lot of capital that has been raised, and there's a lot of dry power that is there. But now the question is, and in fact, going by numbers, $100 billion has been added. It's around $539 billion that has been raised right now. And in the bear market, people are sitting with that much cash. Now, this leads to an amazing dilemma. When it's the bear market, how do we generate cash? Because there are no great, like in the bull market where hundreds of projects were coming in a day, I think today you see maybe 5 or 10 projects that are coming. So how does a VC firm, an investment guy, really look at building revenues? While in the bull market, how do you generate more cash to deploy more? Once you are a $100 million fund, you definitely want to invest much more than 100, but you should have the cash flow to deploy in these markets. And then the whole VC hedge is about finding these bull and bear market strategies where you know what to do and how to generate these cash flows. And in fact, this is a great cartoon where it says, I think the best way to hedge against anything at any market is to sit on a lot of cash. So we at Cypher Capital clearly believe that going a multi-strategy is important. It's not just about going specific, either investing into tokens or investing into equity. And this is something that we as a fund have done as well. When we look at our numbers, this $100 million fund that we have personally, this $100 million has not been raised from outside. This is our personal capital. We deployed close to $70 million in mining, leading to a cash flow of over $10 million a month. So today, even in a bear market when everyone is looking for opportunities to invest in as well as raise capital, we are having a $10 million dry powder coming every month to deploy. So coming to the details, what exactly do we mean by a multi-strategy fund? So, there are certain components that we have identified which really can hedge you against the ups and downs of the crypto market. The first one is mining. Mining is, though there is mining in a lot of tokens, I specifically talk about Bitcoin mining. And as a parent company, Cypher's parent company is known as Phoenix Tech. Phoenix Tech is one of the companies with 20% of the world's hashing power. In Abu Dhabi, we are building the $2 billion mining plant as well. So when people go into mining, we are talking about somewhere around a 3 to 5% return a month, which, a lot of you crypto guys would say that, oh, we are used to 100x's and 3 to 5% might not be a great return. But, in a bear market, 3 to 5% is amazing. Compare it with real estate, where you get 5%. This is really something that can generate cash flows like crazy. And this is, again, assuming Bitcoin remains at the same price. The second thing is about investing into nodes. All of these projects that you see around, I think one of the core components is for them to have nodes so that the blockchains can run amazingly. So this is another thing that we as a fund have been deploying, building up nodes. So we recently deployed $10 million plus in Gala nodes. We are building up a lot of Helium nodes as well. We have a few of our own projects where we are, which have not launched yet, but we are building into the node part. Then other than that, we can also look at DeFi as a way to conserve cash as well as maintain cash flow. You know, a lot of, when people talk about tokens which do these 50, 100x's, you also have to understand that these are projects which may not launch in the next 6 months to 1 year. You know, all these projects that we see raising right now, I don't think the market conditions are great for them to be launching in the next 1 year. So in such cases, getting into DeFi, which probably only gives you 8 to 12% a year, but sees to it that you have cash flow which is guaranteed as well as capital that is preserved, becomes critical as well. Then, you know, one of the things that I've seen with a lot of VC firms, they talk about equity, they talk about tokens, but they don't look at private tokens. You know, tokens that are listed right now. If I look at the market, something like a Matic, which is down by 80%, or something with like Atom, Solana, these all tokens are down by 90%. Aren't they great investments in the market? And they're highly liquid. You know, in tomorrow, if someone needs capital for some critical functions, they can actually get this capital out, maybe at a plus minus 10, 15, 20%. But private tokens also become a key way of diversifying your risk. And finally, you have equity. Now, one of the interesting things that we have seen between the traditional funds and crypto funds, you know, I'm in fact raising one of the funds. I'm raising $500 million along with Kevin O'Leary. And, you know, Kevin comes from the traditional VC background where funds are 10 plus 3 years domain. But when you look at a crypto VC fund, the time horizon for people who are becoming LPs to a crypto VC fund is not 10 years. They don't look at something more than 3 to 5 years. Now, imagine a crypto VC fund investing in equity. You know, we really need a huge horizon. So probably not an ideal fit, but, you know, equity is also important. Like one of the recent investments that we have done is known as Miston Labs, which is the makers of Sui blockchain. This is a project that you really need to be there. It's one of the hot, you know, be it Miston Labs or be it, I'm forgetting the other name, but, you know, so basically equity also forms a component, but it cannot be the core part of it because it sees to it that liquidity is blocked for over a longer period of time. So the point that I'm trying to suggest is that as a VC fund, you know, if you have raised this $100 million or $500 million funds, you need to deploy across these buckets to maintain cash flow during the bear market, to run the operations and keep yourself investing in other tokens, as well as in the bull market, see to it that your corpus increases drastically. So one of the best ways to deploy capital is by looking at the rainbow chart. So quick question, how many of you actually know what a Bitcoin rainbow chart is? You do not. Do you use it as a way to invest? But do you know that it has a very high percentage chance? So this is a chart which basically clearly says when is a great buy zone and when is a great sell zone. In fact, last time when BTC was trending at around $60,000 to $70,000, it was hitting that sell zone, and, you know, people didn't bother. People thought that Bitcoin is going to land up at $200,000 and $300,000, which was illogical. This has happened over the last 3 cycles. We have seen that Bitcoin has gone to blue zones, which were oversold zones where fear was so high, and Bitcoin has reached those red zones where, you know, which were the optimum sell zones. This is one of the best simplistic way of you to invest. You actually start doing BTC and mining when it's at oversold zones, like right now. I think when people say that the crypto markets have crashed, I think it's an ideal place to be investing in today when Bitcoin's at an $18,000. I believe in the future. I believe that a $250,000 Bitcoin in the next 5 years or $1 million by 2030 is possible. So shouldn't we be actually investing in things like BTC and mining? Shouldn't we be getting into equity investments? Today you have people who were coming with billions of dollars of valuation have started reducing it down quite drastically. Then you have DeFi strategies. Actually, DeFi strategies is more like any time. You know, it's a way you can deploy it in a bull market as well as a bear market, because the objective is not to just get returns, but the objective is to have free cash flow as well as conserve capital. And then this whole thing, a lot of crypto events always talk about these private sale tokens. In fact, a lot of these companies out there are raising as well. Those ones are the ones which you should be going when the market is really starting to move back up. The point is, this becomes a basis of how a multi-strategy fund should be investing in. And this is how we personally have been deploying capital. So how does it actually translate? When you look at mining, how does it translate? So today, when we have deployed the $70 million into mining, it sees to it that, first of all, BTC mining is directly proportional to the BTC price. So miners are always priced at Bitcoin prices. So today, miners are cheaper. You're getting lucrative deals. Electricity prices are down in a few geographies. It sees to it that your cost of producing Bitcoin is quite low, giving you on an average 3 to 5% ROI per month. And again, when the bull market comes, this is the time that you actually liquidate a lot of these Bitcoins that you mined and see to it that you deploy the cash that has come out of it. Again, a lot of BTC maximalists don't even end up liquidating these Bitcoins, but using them in DeFi to get USDT against it and deploy. So this is how it becomes a hedge and makes it easier for you to invest without having the stress of how do you perform returns. In fact, we ran some calculations and figured out that from day one, thanks to BTC mining and nodes, our fund performs at a 4x without any stress. And whatever multiples come out of investing in equity and tokens really help. So the thing is, the time is now. This is something interesting that I see, when BTC is at a 70,000 price, everyone lines up on the window to buy BTC. But when BTC crashes to 18,000, everyone thinks that blockchain is going to die and there's no future for BTC. So what I advise people is, it's the time now. You really need to get started and start building for the next cycle. We all, I don't know how many of you have analyzed data from crypto space, but 18 months before halving, the crypto markets start taking a move on. And 18 months post-halving, you see Bitcoin and crypto all-time highs. This happens between November and December of 18 months after the halving part. So point is, you can't be starting after 18 months. You need to start building these strategies and building your cash flow for investments now. So to sum it up, I'll just tell you about Cypher Capital. We are a $100 million fund, the self-funded fund that has a multi-investment crypto strategy. As Fund 1, so Cypher Capital was initially known as Phoenix VC, which invested in over 200 plus investments. The fund did quite well, from $10 million to $500 million assets under management. The new fund has done some 18 investments. These are some of the few investments, but has done 18 investments like Oki Labs, Astra Protocol, Bridge Network, FUNFAR. FUNFAR is one of the NFT plays on Nair protocol as well. So we have done nodes of Gala, Avalanche, Helium, done Bitcoin mining. We have over 15,000 miners under us. And we are continuously looking to invest. You might have heard a lot of VCs have stopped investing, while we have deployed $10 million, including Sui blockchain, in the last 4 months itself. Because thankfully, a multi-strategy sees to it that our cash flows remain maintained. And that's all from now. If you guys have any questions, I am ready to take them offline. And thank you all for your time.